Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Monday, April the 26th, 2010. Well, a change of character today. We have a spinning top type candle for this market, and it's also an inside day in bar chart terms, which raises doubt about the continuation of the trend in the first time frame. The market remains in a first time frame uptrend. The previous day's candle we had a higher high and a higher low, although it was a fairly negative day with a fairly large red body. Today the market hasn't been able to create a lower high and a lower low, nor has it been able to continue with the higher highs and higher lows. So the previous trend remains in force, which was to the upside. Now the market did find resistance at the 82 level, which we've highlighted previously as a very strong area of resistance for this market. And certainly in between this area from the 81.4 to 82 was certainly a very strong area of resistance or potential resistance for this market. To the downside, there is potential support offered by the Kijun-sen and Tenkan-sen, which are roughly around the same area, around the 81 level. So there is potential support there. To the downside below there's the area around 80.4 to 80, where we have the top of the cloud and the previous area of resistance and support, and certainly down through the cloud, 79.50, and down to the bottom of the cloud at 78.94. We have very strong support to the downside. So if the market does come off, there are a lot of levels there where the market may hold up. Now the market is trading up above the cloud or the Kumo, and the market hasn't really traded down into there except for one day over the last few months, so that's fairly significant for this market. The market is having trouble getting going to the upside because of the strong resistance offered by the 81 to 82 level, 81.4 to 82 level. The market is trading up above the Tenkan-sen and Kijun-sen, which means that in the medium term to fast term timeframes, the market is positive as well. But the short-term dynamics in the market with these red candles, red-bodied candles, really aren't supporting that. Now we have had a crossover of the Kijun-sen above the Tenkan-sen, and that's a negative signal in Ichimoku chart terms. The only problem for the bears is that crossover occurred up above the cloud, and that makes it a fairly weak signal. So those of us who are more risk averse really would not want to take a signal like that. The main reason being that the market will need to trade off and interact with the cloud, and we have a fairly large area of the cloud where the market will find very strong support. So the potential for the market to depreciate is greatly diminished because of this strong support through here. To the upside, however, one would need to consider that there's only, even though it is a strong level, it's offered by previous swing highs and previous evidence of downside price rejection from the 81.4 to 82 region, but there's no cloud for the market to interact with to the upside. So that's why the crossovers, bullish crossovers above the cloud are strong, bearish crossovers above the cloud are weak, and vice versa for if the crossovers were below the cloud. So if the market does come off, as we've said, strong potential for support, a very strong area of resistance, but if the market does test this 82 region and close up above the swing high at around 82.24, with a very strong bullish close, then there is potential for the market to appreciate, but we do need to just be patient and wait for a breakout to occur.